funding. I call it cradle to grave. Whether you're sending in a pre-approval submission or a live deal and your documents, Mark is going to pick up your entire file and work it right the way off until it heads off for funding. Now, speaking of funding, we also handle all our own funding and servicing in-house. Now, the reason that's important is it allows us to keep control of your experience as mortgage agents and your client's experience. We're not farming things out third party. We do fund each and every weekday. I've heard rumors out there that the weirdest rumors that CMLS only funds once a week. This is not true. We fund every day, Monday to Friday, multiple times a day. So if you've got a deal in, you don't have to worry about that. Servicing as well. When your clients call in to ask a CMLS employee about their mortgage, they are reaching our own employee right here in Canada, dealing with a CMLS employee who cares about them and cares about the business. It's not farmed out third party, and it's not going to a call center overseas. So it's a nice, consistent experience. Your clients do have the ability, or you have the ability as agents, to get our consent form signed, which allows you to fully service your clients' mortgages should you choose to, which means instead of having them deal with servicing, you can reach out to directly on their behalf, help them with due date changes, payment frequency changes, help them with exercising their prepayment privileges, all those kinds of things. Of course, if you have clients who are extremely tech savvy, we do have our client portal as well that allows them to do all the same things themselves online. You have the ability to choose your own compensation model, whether you want all your compensation upfront when your deal funds, or whether you're the kind of agent that likes to set yourself up with trailer fees or residual income. We do offer that. The default is upfront, so if you send in a deal and you don't tell us what you want, we're just going to pay you your full compensation when your deal funds. If you specify the renewal model, it allows you to participate in the renewal process with CMLS. Everybody knows the stat. Most lenders here in Canada renew mortgages on average about 3 times. So it gives you an opportunity to continue to earn income if it makes sense for your client to stay with CMLS without having to worry about churning your book. We launched our client loyalty program earlier this year, which allows you as brokers as well to participate in early renewal or equity takeouts for an existing CMLS client. And the client gets to benefit from the possibility of a heavily discounted or possibly even fully waived penalty. So it's a great win-win-win for all of us, for us as a lender at being able to retain our client, for your client being able to enjoy a reduced penalty, and yourself being able to still be compensated and go through our deal center here as well. We launched our partnership program earlier this year as well, which really gives each and every one of you to participate in the shared success of White House and your partnership with CMLS. So collectively, all your volume counts together and adds on the additional perks to do with volume and efficiency, such thing as discounted or reimbursed appraisals, that kind of thing. And finally, part of our technology arm, we just launched auto approvals. So when you send in that perfect deal that fits the box perfectly, theoretically, you can have a commitment back to you inside of 30 seconds, an approved conditional approval. So part and parcel of what we're doing and working with on our what we call our AMI platform. So AMI stands for Advancing Mortgage Innovation, and it was designed exclusively to save you time and make you more efficient. So one of the things that you'll see, you've probably seen these before. When you send a deal in to CMLS, you'll get one of these notifications back. This lets you know that, yes, we've received your file, who your underwriter is, and what your CMLS reference number is. If you don't see one of these within an hour of submission, there may be a problem and your deal may not have made it through. That's when you'll want to reach out to me just to double check to make sure that we've got your deal so you don't lose any time. You may see one of these, which is an auto decline. Since we launched this program, it has saved our underwriters on average 2.5 hours on every single file that they touch. So it's helped them to speed up because it identifies any shortcomings in a file immediately, rather than you having to wait for your underwriter to pick up the file, find out something wrong, and then let you know 8 hours down the road. If you've missed a small piece of information, one of these will trigger and let you know what needs to happen to be fixed. So most commonly I see just missing information like missing square footage on a property, missing age of a property, that kind of thing, or if the credit bureau is too old. I know my rate sheets can get confusing. These are my products at a glance. Because we're pressed for time, I'm not going to go through all of this with you. What I will do is I will print this presentation off to PDS and send it off to you, Pete, so that you can share it with the entire team. But this is just a quick snapshot of what each of my product lines means when you're looking at it on my rate sheet and what you can expect, okay? Just launched my jumbo loans program. I'm extremely proud and happy to finally be able to do this. We are now throughout British Columbia be able to lend on a sliding scale up to $2 million when my prior cap was just $1 million. So for your areas, if most of you working up there, so for Kelowna, Lake Country, you are 80% of the first 1.25 million and 50% thereafter, all the way up to that max mortgage of 2 million. For Vernon and Coldstream, it's 80% of the first 1 million, 50% thereafter. So it's a great opportunity for those clients that are buying or refinancing a property that's perhaps of a higher value. So I do encourage you to check this program out if you have an opportunity for a large scale mortgage like that. Other underwriting highlights here at CMLS, of course, extended debt servicing available for clients with strong credit. We do lend in most urban and suburban areas and communities with population over 5,000. So that means Penticton, Summerland, Kelowna, Lake Country, Vernon, Coldstream, you're all okay. Armstrong's okay as well. Up in Salmon Arm is okay as well. Anything outside of those areas, if you're getting into a smaller community, maybe if you're on the other side of the lake in Salmon Arm, maybe just reach out to me first before you send the deal in, just to make sure that I'm lending in that community. I will look at acreage and ALR properties on a case-by-case basis, as long as it's purely residential in nature. So no hobby farming, no horses, no chickens, no growing of hops, anything like that. But if it's residential and conforms to the area, I can probably still get it done if it's an acreage. Similarly, no limited market properties. I know up and around the Lakes District, there's we may see some log homes or some other unusual constructions. Those kind of things are hard for me to do, as is leasehold property. I cannot touch a lease unless it is specifically a government lease, a provincial, federal, or municipal lease. What else? Oh, age-restricted properties as well can be a little bit difficult for me. 19 plus is usually a slam dunk. When you get into 45 or 55 plus, I am looking for a lower loan to value on those. Something at the 80% or lower for that kind of thing. $50,000 minimum mortgage for purchase and refinance transactions, and $150,000 minimum for a transfer. I've got a little bit of wiggle room on the transfer, so a couple of thousand, but not too much, because it really does, because we're paying for the legal part of the transaction, it becomes very, very difficult for us to handle the profitability of that. When you're sending in a file for your clients, your employment should be considered permanent in nature and not subject to probation. They should be employed at least 12 months on the job or in the same field for 12 months. The exception is for new to Canada clients when I only need 3 months. Okay. I will look at casual and seasonal employment as long as it's ongoing. So somebody who works in forestry or fisheries or something like that, where they work, maybe 8 or 9 months of the year and consistently collect EI, and they've done it year after year, I will do average income over 2 years, including that EI income. When you're sending in your files, Equifax bureaus only, please, and please make sure they're within the last 30 days. Client's beacon scores for insured must be at least 640, and they should have trade lines, 2 trade lines established for a minimum of 12 months. I can make an exception for younger clients with 1 trade line established for 12 months and alternate credit like rents paid or something like that. I will work with former bankrupts and consumer proposals in OPD as long as they are discharged a full 24 months and reestablished as well across 2 trade lines. Typically, I'm limited to 85% loan to value in a former bankrupt. I can go on occasion to 90% on an exception. For your clients with rental portfolios, I will take market rents in lieu of lease agreements if you don't have lease agreements handy. For owner-occupied duplexes or suites, it's 100% of the suite income added to gross income for clients with beacons over 680. In British Columbia, suites do not need to be legal. They just need to be self-contained. So own separate entrance, kitchen, and own bathroom. I will do a private sale transaction with a full appraisal. Now, when you're ordering appraisals, you can order them direct. You don't have to go through NASA Solidify. Just make sure that your favorite appraiser is on my approved appraisers list. If they are, you're good to go. 100% of guaranteed return to work income for maternity, paternity, and short-term disability income. And of course, I participate in all the insured programs. So that's your spousal and family buyouts, your new to Canada, your purchase plus improvements, even the CMHC enhanced BFS. We're working with that on a case-by-case basis as well. For your self-employed clients, of course, I do have a stated income program that's available through either CG or Sagen, but I will also allow you for your clients that are incorporated to gross up that T4 income if you want to approach it from an income qualified standpoint. So if they're incorporated, I will take dividend income. You can't gross that up, but if they're T4ing themselves, I can gross that up 15% and use the 2-year average. Similarly, for sole proprietors or partnerships, gross up to 15% of the line 150. If they have personal or business debts reporting on the personal credit bureau, like a business vehicle, for example, if I can clearly show that the business is paying for it, you can take that out of the personal debt service. For clients with large rental portfolios, 1 to 3 properties, if you're doing an owner-occupied purchase, you can use my rental worksheet. It works approximately like a 75% offset. Okay. We do, of course, offer the no-fee switch-ins. They're handled by F&F for us. We cover the basic cost of the F&F program, and we reimburse for appraisals up to $350 upon funding. Like most every other lender out there, you can capitalize up to $3,000 of the other lender's fees in with a new mortgage. But what not everybody is doing is grandfathering under the old rules. So if you were transferring a file over to us that was originally registered prior to the B20 rules, October of 2016, you can bring it over under the old rules. That means qualifying the contract rate as long as they're taking a 5-year rate or longer. If their amortization is still more than 25 years, you can bring it over at the original amortization less time gone by. And it doesn't matter if the purchase price was over $1 million before. That's it for me, from my side of the conversation. Of course, we do have our broker resource center. All our rate sheets are housed there, all our product guides, forms, calculators. You can get there. It's at www.cmls.ca/brokers. If you can't find something, reach out to me. I am more than happy to flip it over to you. So again, don't worry about if I talk too quick or you miss something. I'm going to print this off and send it off. But in the meantime, I'm going to pass over to Steve. I'm going to skip Sunny's slides here for Aveo and move right into SLG. Go ahead, Steve.
Perfect. Thanks, Jeremy. Don't worry about the time. I can rattle through this pretty quick. So under the SLG banner, I do multi-unit residential insured with CMHC. So where Jeremy can do up to 4 units, I get involved when it's 5 units and upwards. So what exactly a multi-unit residential building looks like, the vast majority of what we're looking at is apartment buildings. Probably 90% of the deals we're looking at fall into that category. But it also covers mixed use properties. So think commercial on the main floor and then apartments above. But it also covers single room occupancy. Might not see too many of those in Kelowna. Seniors homes, affordable housing, and students' residences. So all fall into that category. So if we're looking at an apartment building, if you're looking at it without the insurance, you're looking at it strictly from a commercial lens. So you're thinking maybe 20 to 25-year amortization, maximum loan to value of 75%, and interest rates somewhere between 4 and 5% right now. So when we put in the CMHC insurance, it allows us to extend the amortization to a maximum of 40 years. Interest rates plummet down to probably about 2.3% for 5-year rate right now. And we're doing our debt servicing calculations. We're at the contract rate and the contract amortization. So that alone helps us increase the loan to value, but we can actually push it beyond 75% up to the 85% mark. So I'm financing apartment building purchases for people with 15% down.
Steve, just a quick question.
Sure.
Do most of these fall within like a commercial zoning or like a multi-residential zoning? Did you guys have any kind of limits on the zoning types?
No, as long as it allows for it. As long as it allows for long-term housing. And it has to allow for long-term. I'm seeing more and more that's geared towards short-term, kind of catering to the Airbnb market. That kind of falls more under hospitality. tourism, where we're doing everything, looking at everything through a CMHC lens, which is there to help housing stock. So as long as it allows for at least 6 months, we can look at it under this banner.
And this would have to have a residential component as well. This doesn't apply to something like a commercial building with commercial tenants, correct?
So we can look at mixed use, but it's under certain guidelines. So they want to limit their insurance exposure to the commercial component. So as long as it's no more than 30% of the total square footage and 30% of the income comes from that commercial component, we can still look at it. And it still has to reach that 5 residential units. So if it's 2 downstairs, 2 commercial downstairs, and 4 upstairs residential units, that won't qualify. I need to have that 5th residential. I saw one of those today. It was unfortunate. So how we get these deals done, we don't deal with Logics or Velocity. You're working directly with me from start to finish. So I have an underwriting team, group of analysts, and funding team, but you're dealing with me from start to finish. Whether we're going to start doing the debt service calculations up front, I'm right there till the end when dealing with the lawyers for a successful close. So I'm going to ask you for just a handful of documents: rent roll, operating statement, personal net worth form. And with these 3, I can tell you what the building will qualify for. You can tell you how much it qualifies for, with the rate, with the fee, what documents are outstanding. I can tell you this over the phone, and then what's going to happen is you're going to go back to your borrower, tell him those specifications. If it works for him or her, then we're going to release what's called a letter of interest. It's a 2-page document on CMLS template. It'll have your name as the broker on top with the brokerage address, and it'll outline everything we discussed. And if at that point they're happy to move forward, repeat documents. Is that for me or for? Okay, rent roll, operating statements, and personal net worth form. And that's all on that broker portal that Jeremy was showing earlier. So we're going to get those documents. So release the letter of interest. If he or she is happy at that point, get them to sign it, send it back to us along with a good faith deposit of $5,000, and then we start the underwriting for CMHC submission. So we collect a few more documents, prepare that package, send it off to CMHC, and their turnaround time for this type of product is actually quite slow. So for single family, understand it's 2 to 24 hours. In the multifamily space, they're quoting right now 8-week turnaround time. Unfortunately, we don't have any other insurers in the space, very unfortunately. So we kind of have to deal with those turnaround times. So when you send a package in, the first thing I'm going to look for is the subject removal and the closing dates to make sure we can reach them, and maybe we might have to go back and renegotiate. So, but once we have the certificate of insurance, that's the last piece of the puzzle we need before issuing the commitment letter, which should pretty much mirror the letter of interest, maybe with a little bit more legal jargon. They're going to sign off on that, goes to lawyers, fund. So that you have to think maybe 3 to 4 month process for these from start to finish. A couple of things I like to note for the people more comfortable in the residential space. So in this world, holding companies are totally fine. I know it can be a challenge on the single family side to find lenders to do rental property and holding company, and this totally fine. With no maximum door limitation. So if you're having borrowers, I'm seeing that more and more now, where borrowers, yeah, I can. The only issue with borrowed down payments is the concern is CMHC has net worth requirements. So if he's borrowing the down payment, is that an indication of kind of lacking net worth? And he has to have a minimum 25% of the loan amount. He has to have that in terms of net worth. So as long as he has that, the down payment can be borrowed. So again, back to the no maximum door limitation. I'm looking at more and more deals where the borrowers have 7 or 8 units, 7 or 8 properties, and they're kind of capped out in the single family space, and no lenders want to do that much underwriting. So they're going into the multifamily space. What form? Cash or equity? Cash or equity? It can be either. It can be equity in properties. RSPs are fine. I think we're talking about confirming personal net worth. So equity in properties is fine. RSPs is fine. Savings statements, that's all fine. We have a minimum, credit wants us to say we have a minimum of $500,000, but I've had success getting below that. So I would say get as low as about 425 for insured transactions. I always want to reiterate, CMHC is slow. Unfortunately, right now, it's just a reality of life we have to deal with. So sometimes we have to move subject removal days, closing dates. But if we get an issue where the sellers are not interested in extending those dates, and just the fact that they don't care, frankly, we do have a bridge product. So for this 1-year bridge, we can go up to 75%. There's no maximum. No. This space is really quite vast. I'm getting deals from, more I call them residential mortgage brokers sending me 5 and 6 plexes. And I'm also sending them from, the DLC commercial guys that are doing 100+ units. It's a huge, huge, vast space here. So there's no maximum on these.
And are you able to go up to like 85% even on those big deals?
Yep, as long as the debt services.
Wow. Okay.
Yeah. So yeah, the bridge product is a 1-year deal, 75% loan to value. It's priced at 5%, and it's closed for 6 months. So we close with the bridge. In the meantime, we're working on with CMHC to do that takeout. So 6 months in a day, take it out with long-term funds. We're using that product quite a bit, given the turnaround time with CMHC. Location is important. The Okanagan is fine. Major centers are all fine. When we start getting below, I'd say about 30,000 people, and it's quite remote, like it's not a bedroom community, those locations start to get pretty tricky. Broker commission, most important part. So for the smaller stuff, 5 or 6 units, we're typically doing a fee split. So we'll do charge the borrower 1% and split that with you after closing. When it starts to get kind of $1 million and up, which is very common in these areas, is to build your fee into the interest rate. So I think around 25 basis points works out, let's say 25 basis points into the interest rate works out to about a 1% fee. So if CMLS wants a return of 2.3%, the borrower will pay 2.55, and that works out to a 1% commission we pay immediately after funding. Very common in the space. And that's kind of a quick rundown. Glad I was able to keep it just under the wire. I do weekly Zoom presentations on this topic where I go in a lot deeper and more detail on the debt servicing side. Typically take about 30 to 40 minutes. I'm doing, I do small ones. I'm up to about 5 to 10 a week. So if anybody's interested, please fire me an email and I'll send you an invite for next week. I do these all the time.
Steve, can we get your email address? Because for the life of me, I've been kind of monitoring all our lender communications. I didn't even know that this existed, and this is really cool. So
yeah, we kind of noticed that there was it's typically what happens is someone comes across a commercial deal, and this is technically a commercial deal. Residential borrowers will send it over to the commercial guy that does these deals, and a lot of these deals, it's when you slice up the commission, maybe they're seeing it's a little bit too much work, so a lot of these deals are falling apart before they're getting anywhere near the finish line, and they're really good deals. So we're trying to capitalize on that. So we rolled this out about 3 years ago. But
this is strictly for purchases, not like a construction of such a project.
I'm not doing construction, but I'll do takeout. After it's complete, down to that roughly 500,000 minimum. Once it's complete, right before you get occupancy, we'll submit the package, and then they'll have 6 months exposure with the construction lender. So in that point, they can lease up the property because it does have to be leased before we do the financing, but we can still underwrite based on market rents, which is totally fine. So we can do takeout. We can refinance other lenders. So if they're with credit union paying a higher rate, we can do a dollar for dollar refinance. If they want to take equity out of the property, the purpose of those funds has to be to buy, improve, or build other multi-unit dwellings to a minimum of 2 units. So they can buy a duplex, for example. I think that's pretty much everything.
And what's your email?
Right there, steve.ennis@cmls.ca.
There you go. Thanks, Steve. Yeah, you've got all our contact information there, from my information as well, from Mark, your underwriter, Sonny with the veil, and Steve at the bottom. So there's another question here. Yeah, you've got that typed out. Wonderful. So I think we've queued up our allotted 30 minutes. Before I open up for questions, I do appreciate your partnership. I know that we have been growing greatly with White House. We really do value. Thank you so much. For any of you that haven't yet tried us, I do encourage you to check us out. If you're not signed up with CMLS as an approved agent, I do need to get that done so that you're able to submit directly in your own name. But other than that, any questions before we sign off? It doesn't look like it. So I do appreciate it. Thank you so much for your time. Thanks for the invite. And Steve and I will let you get on with the rest of your meeting.
Awesome. Thanks so much, Jeremy. Thank you, Steve.
Yeah,
Thanks, guys. Take care.